about stocks this week as the hope rally continues. Both the Sensex and the Nifty touch fresh all-time highs. We'll tell you what your investment strategy should be for the big week ahead. Banking stocks rally as the Bank Nifty ends up 3.3% for the week. We'll give you a strategy for banking stocks. And Prakash Diwan tells you why you should be investing in Heidelberg Cement India for the long term. Welcome to All About Stocks. You're watching ET Now. Thank you so much for joining us. Now, as we expected, the markets have been very volatile in the run-up to the election results, which will be announced on the 16th of May. That's Friday next week. Now, some would argue volatile in a good way. The markets were at an all-time high this Friday. The rupee joined the rally as well. It was on a month high as well. Now, over the next half hour, we'll tell you what your investment strategy should be. In these confusing markets, we'll tell you what stocks you should be buying for the long term. We'll also work out a strategy for the next 1 week. When all of those results will come out, we'll tell you how you should be designing your portfolio. Remember, if you have any questions, write to us. Our email ID is at the bottom of your screen, and you can reach me on Twitter as well. Let me first bring in my colleague Ajay, who will give us an update on how the markets performed this week. Ajay, also take us through the banking stocks that were in focus this week.
Well, Faye, it was a big and very important week for the Indian equity markets. It was a week of contrasts. Out of the 5 trading sessions, the first 4 trading sessions, we were trading with negative bias with flat endings on the benchmark indices. But it was Friday when we actually got the big move on the benchmark indices. Almost everything in the high beta, financials, capital goods, everything rallied hard. On a net basis, we made around 2.5% and fresh record highs for the benchmark indices this particular week. Clearly, the week belonged to the banking sector. With it was a leadership sector this particular week. Record highs on the banking index, fresh buying seen, fresh multi-year high seen in several banks, and of course some other index heavyweights like Larsen this particular week. We also saw IT stocks which were getting a drubbing past couple of trading sessions rebound sharply from the 200-day moving average. Rupee strengthened to a fresh multi-week high as well this week. So it was an exciting week. Of course, a lot of optimism is in the price now, according to traders, that perhaps BJP is coming in a leadership position this particular week. So the next week becomes extremely important for traders. All eyes will be on exit polls and of course subsequently the final election results. So it is expected to be extremely volatile week for Indian equities. Also, if you look at the banking sector in particular, there had been a lot of short positions built into some of the public sector banks after looking at the week earnings for the fourth quarter. All of that got reversed in today's session on this particular week. And now we are talking about the banking sector perhaps leading the recovery from here on if BJP actually comes to power. A lot of analysts we speak to say that corporate revival or earnings growth revival or a revival on the economic front will be led by banks. So that is the place to be. Hunt for low valued stocks in the PSU basket if one has to make a portfolio for next couple of months. Private sector banks would be high beta plays, but are richly or fairly valued to a large extent is what they say. However, on the flip side, FIIs do favor private sector banks, so one has to go on a case to case basis. But banking is clearly seen leading the rally from here on if of course there's a stable government in the center and which can give a roadmap for the country for the next couple of years.
All right, Ajay, thank you for that update. Joining us today, Prakash Diwan, Director at Altamount Capital Management, joins us from Delhi. Prakash, thank you so much for joining us. Big week ahead, obviously, on the 16th when we'll have those results. Would you say the market, given where it ended on Friday, has priced a lot of the good news in? How much more of a movement can we hope to see on the upward side on Friday?
Well, it's anybody's guess how far the market could go up, and we are, once again in a new territory of sorts, in a new high, and it's very difficult to kind of put, a lid on the kind of exuberance that can come along with such news flow. My sense is we could still be pleasantly surprised with some sort of an upside, and I really wouldn't be surprised at all over the next couple of days if the Nifty actually crosses the 7,000 magical mark for 7,000 for the first time and sustains there for at least another couple of days. So by the time the final result outcome is known, you would probably see the Nifty go up another 500 points from where we are, 400, 500 points, which is a significant pick up. So I don't think the positive news is yet priced in. You could still be in for a lot of pleasant surprises.
Well, Prakash, I want to ask you this. As a retail investor, if I were to sit with my terminal open on Friday when the results are coming out, sell if it's a good day, buy if it's a bad day, what's wrong with that strategy? Is that a strategy we can use?
Yeah, I mean, if you have stocks which you are sitting on good profits, you should definitely be selling some of that even before the result outcome, because what could happen is you may not really be able to take a decision at that point in time, because the market may not actually react too much because of the poll outcome. You know, a lot out of the poll outcome is going to be decided post the next weekend. So it's only after that you probably have the 19th, the week starting 19th is going to be much more critical, when things will start falling in place. I mean, especially when you factor in that the good news is that the NDA is coming back to power with a significant majority and absolutely nothing coming in the way. But you should book profits much before that D-Day and don't wait for it. That day could be a bit too late.
Well, Prakash, if we look at the various sectors that have rallied this week, obviously banking is going to pop up right on top. ICICI Bank, they're going about 6%, I think, on Friday. Now, I want to ask you, when you say book profits over the course of next week, if we're looking at profits there, would you say PSU banking or private banking on stocks like ICICI Bank? What would you recommend we do?
No, I'll tell you, it's like very simple. Anything that has taken a full year to move up just about 8-10%, but in the last 1 month has done more than 25%, then absolutely, there is a need for course correction, and the stock price will react to news flow, and more so on the downside. When stocks run up, they always come down. Also, at some point in time, there's a pause that some of these bank stocks would take, especially the ones which have had a scorching run against time. You look at OBC. I mean, we've discussed this stock quite often on the show. Used to be in my portfolio also at one point in time. And if you see the kind of run up, it's bound to take a pause somewhere. So I think people should look at booking profits on a stock specific basis. Wherever there is anything upwards of 25% that they've made in the last couple of months, or maybe the last few weeks, you need to book profits. Especially mid-cap PSU banks, your answer to answer that question. Yes, certainly so, because they've run up much ahead of their numbers, much ahead of the improvement that is expected.
Well, Prakash, do you have any buys at all this week or for next week right now for your clients?
Yes, we've kind of recommended some tactical positions in the likes of Reliance Industries, ICICI Bank during the week, and M&M. These are stocks that would possibly definitely do well before the result outcome, and this exuberance would be led by some of these heavyweights, and I think some of them could also give you a very high degree of safety. So these top three would be in that order. Reliance, ICICI and M&M would definitely be part of the basket.
There have been some views of the fact that if we don't see that majority mandate that the market has been hoping for, and if we actually see a mandate that's maybe a hung parliament calling for a coalition of some sort, we'll see the market correct quite sharply. I want to understand how sharply you expect the market to correct. And do you believe then that stocks within the IT and the pharma space will then hold up our portfolios?
If you look at what's happened even on Friday, the week before the election outcome, very clearly there's been some profit booking that's happened in the defensives, because people have decided to again put their money and their force behind the high beta stocks, cyclicals. And pharma and IT could probably be sideways for a while. I don't believe they would get impacted by any kind of an outcome, particularly IT, except for the rupee levels. There's really not much to read in terms of what could happen on the basis of the outcome. So if you are an investor invested into these defensives, stay put. Defensives always work in events like these, and there's no reason why they should not be favorable even this time. So an allocation of at least 25% to these two sectors could definitely augur well for the portfolio.
Well, since we're talking about IT, Prakash, we know that the IT index was down about 4% for the week, and we saw Infosys take a beating, but that's also because of the stronger rupee. Do you recommend buying any of these IT stocks at this point?
No, I would believe IT would continue having a little bit of a rough time for some more weeks, or maybe another quarter or so. But remember, the weakness in the rupee, the strength in the rupee is not something that's going to last forever. We've seen the dollar weaken against a lot of emerging market currencies, including ours. and thanks to the kind of FI inflows that we've seen, the rupee has been able to hold some ground much strongly than some of the other peers. But this would also reverse at some point in time, maybe at about 58, 50, 58. I don't know the exact levels, but as and when that happens, companies will get a chance to recalibrate and re-hedge their positions on the dollar, and that doesn't mean that they're going to have a forex hit every time the rupee appreciates. So those are times which will happen, and the ground reality is IT is doing well in most of the markets, the developed markets like Europe and the US. The pickup is significantly there. So I think it's a good time to buy IT in the next 3 months, irrespective of the exuberance or whatever is happening in our domestic markets and the election related outcomes. IT selectively will definitely reward investors in the long run.
All right, so let's take a few questions, in fact, from our viewers that came in during the week. Bala has written in, he has 200 shares of Wockhardt, which he bought at 834 rupees. He wants to know if he should hold on to that stock. Wockhardt on your screen right now, ended the week at about 768. We were just talking about IT and pharma. Where would you place Wockhardt at this point? Would you recommend someone like Bala hold on to it?
While I'm definitely in favor of pharma to continue holding strong, this is not a stock that I really like. I mean, I've talked about this earlier as well, that every opportunity you get, every rise you get is an opportunity to exit and move into something which is much more consistent, has a much better future. So if he's willing to bite the bullet, book a little bit of this loss, you could probably look at a Sun Pharma. Very distinctly, it could outperform the markets over a longer period of time and give him much more resilience in the portfolio.
Right, let's take another question. Nandakumar has written in, he's one of our rather well-informed investors, Prakash. He has 1,300 shares of NCC at an average of 56 rupees. Now, he tells us since NCC has reduced its debt and the rupee is expected to appreciate, should he sell out at the current levels? Now, NCC ended the week at about 56 rupees. What's your call on the stock?
No, one is he's bought it at a high price. No doubt that the company is doing some significant amount of work on deleveraging itself by offering the crown jewels of sorts, the BOT projects, and lever themselves downwards or below the D ratio to become maybe 1.6, 1.7. I think the company definitely is in a momentum. 65 could be a decent level to look at. So he'll make a decent amount of money, roughly about 20%, 18, 20%. That's a time he could probably exit.
Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Prakash Diwan is still with us, helping us figure out a long-term strategy for our stocks. Now, Prakash had earlier recommended Gujarat Pipavav Port when it was trading at about 70 rupees. This was February earlier this year with a target of 100 rupees. Now, that stock is at 97 rupees right now. In a span of 3 months, it's gone up nearly 40%. Almost hitting its target. Prakash, thank you for the strong recommendation. But for those of our viewers who bought the stock on your recommendation, would you recommend that they book out now that it's hitting its target, or can we hope for more?
No, I think definitely, thanks to the kind of momentum and infrastructure being a buzzword again, the stock has rallied quite a bit, much ahead of expectations that I had. But, thanks to the robust numbers that it has posted, very clearly it's backed with decent improvement in the fundamentals. I would believe that continues for at least the next couple of quarters. So there's absolutely no harm holding it on, and maybe you could look at a revised target of 118, which is another 18-20% away from here.
And Prakash, for investors who are watching now who hadn't bought it when you recommended it in February, is it too late to pick up this stock?
Maybe the risk-reward ratio gets a little bit skewed in terms of the timelines that you would have to wait for. But otherwise, the stock could also see some sort of profit booking at these levels, which means it could come down. So if somebody were to acquire it at, let's say, about 85 to 90, between 85 and 90, it could be a good entry point, unlike where it is today. So if you get those kind of dip, which you could in these markets, anything could happen, buy it and then you could probably hold it till about 118, 120.
All right, so that's Prakash's recommendation. Now let's take a look at his long-term recommendation for this week, and he's brought us Heidelberg Cement India, which is currently ended the week at about 46 rupees. Now, the company saw blockbuster earnings for the quarter, and the management now focuses on debt reduction. Prakash, tell us why this makes your list right now.
If you see the kind of gradual but consistent rise cement stocks have had in the last 2 months, in spite of the fact that there's not been a veritable change or a very dramatic change in operations for most of them, you would realize that cement is a joker in the pack of sorts. So anybody who's underinvested, who's evaluating portfolios, cement as a sector would be underinvested into. I chose this particular stock thanks to not only just the decent numbers, but the fact that today it stands at one of the healthiest margin, EBITDA per ton kind of rates that they manage. So while cement top line growth may be muted for some more quarters, this is one company which has improved efficiencies dramatically and across three very distinct areas. One is, of course, the raw material cost. The second is transportation cost. The third is the employee cost. Now, if they were to do this along with the deleveraging effort that they're looking at thanks to the parents' cash surplus status, I think Heidelberg could go places from here on. And the Raigad unit which they've divested has also kind of accelerated that whole process of deleveraging. So my sense is it's great management, it's a great product mix, and some very efficient operations to back you up at this 46 rupee level. So very easily you could have a 30-35% upside from in the next 2 quarters.
If you're talking about a great management, Prakash, we know that the CEO quit quite suddenly. Ashish Goa, who's been the CEO for about 8 years of the company, quit rather suddenly earlier last week, in fact. Is that something that should cause any concern among investors who are holding the stock?
Yeah, I mean, if it's something which gets attributed to some sort of a issue in the company or the business, there could be a worrisome area. But what I meant by pedigree and parentage is because Heidelberg as a group, I mean, it's definitely got a lot of muscle, it's got a lot of staying power in a business that sees a lot of ups and downs and very long cycles of depression. But, the management change could probably be for other reasons, and I'm not too sure if they've clarified or the clarification indicates anything that's worrisome at this point in time.
All right, so Heidelberg, give us your targets for Heidelberg Cements India, Prakash.
I would probably believe 60 could be a very fair target, as I said, in the next couple of quarters, which almost adds up to about 30-35% upside from here.
So that's Prakash's recommendation for this week. Remember, every time he comes back into the studio, we're going to take a look at how the recommendation is doing and ask him for some more advice. Let's take some questions. Ashish Gupta has written in, he holds 1,900 shares of Rallis India, which he bought at 170 rupees. He also has 20,000 shares of TVS Motors bought at 79 rupees. He wants to know if he should hold on to both of those stocks. Let's talk about Rallis India first. What's your call for someone who's holding nearly 2,000 shares? Should he continue to hold on?
Yeah, so Rallis is definitely another, nice player in that segment which has suddenly got rediscovered by investors and traders of late. But I would believe it's kind of topping out at the current levels. You may probably book half of the quantity that you hold could be booked as profits, but it's again going to be taking a little bit of a pause, consolidation, and then of course start growing. So I would believe a prudent thing would be to book profits or partial quantity that he's holding.
All right, and let's talk about the other stock. He has TVS Motors, 20,000 shares of TVS Motors. Now, within the auto pack, is TVS Motors the best option for him, and does it make sense at these values for him to hold on?
He's gotten at a very decent level. Of course, TVS had a stellar run right from the mid 50s just a few months back, and we've been talking about it quite positively ever since. But I would still believe TVS Motors has the steam to go all the way to about 115, maybe 120 on some good days. But it would depend on what kind of reallocation he is willing to make within the auto space. If he is fine with getting into something else within auto, again the quantity being significant, he could book partial profits. Exactly half the shares that he owns he could sell. The rest he could transfer money into an M&M and ride the curve that I would believe M&M is going to see in the next few months.
All right, we'll just take one more question. Nishant Arora has written in, he has 350 shares of CASC, bought at 535 rupees. Should he hold on to that stock? We know the stock was recently upgraded by Deutsche Bank to its rating and it's given a buy. What's your call on the stock?
I think it's overvalued. And these are the kind of these are stocks that would come down very sharply if things don't go their way. Any change in mood, any change in sentiment in the overall market and CSE including could kind of come down. So I think this is a tough call. You'll have to kind of decide on whether he's fine with booking a marginal loss or whatever, whereas I don't know his exact purchase price, but it's not something that he could kind of make great money going forward also on. So just stay out of it. If you've got some money, take it off. If you're losing some, put it in a safer bet. But, these are difficult times for the likes of a CSE.
Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Prakash Devan is still with us, helping us make money over the long term. Let's take a look at Prakash's own report card. Prakash designed a portfolio for us on the 30th of November 2012. That portfolio is currently at an overall gain of 9.14% compared to the Nifty over the same period. The Nifty is up 16%, so we are underperforming the Nifty. I'm going to give you a list of the stocks in Prakash's portfolio. There's Gujarat Pipavav Port, Tech Mahindra, Kane, Cipla, Coal India, ITC, M&M, Tata Steel. I'm going to ask you about Coal India like I always do. It's still dragging your portfolio. Do you believe a stable government, like you were saying earlier, will change the course for oil and gas and for power? Will that be the same for coal as well?
No, naturally. I mean, coal is an integral part of the entire energy bottleneck, and the government is going to be compelled to look at doing that. You know, you have power projects out here with huge capacities, and they're running out of either gas, or if they're gas based, or they're running out of coal, and that is something which the government cannot afford to do too long. The dead assets will have to be revived, and Coal India is the key out there. So my sense is we waited quite a bit, nothing much happened, but then we are sitting in probably the dawn of a very decent period for the likes of Coal India. So we would continue staying invested.
How long before we see Cipla show some results? It's down about 5% right now, Prakash.
Yeah, well, Cipla has, again been one of those complex businesses that hasn't been able to outgrow its peers. As I said, pharma is getting to be competitive more on a global scale, and Cipla has lost out a little bit in terms of market share in certain new markets that it ventured into. But I believe the company is great. It's got a great pedigree. It's got a great product mix. It's just a matter of time before it gets discovered, either through the M&A route or through any kind of a valuation methodology. But somewhere it's going to kind of have this unlocking of value, and you'll probably see it play catch up.
All right, so that's Prakash's portfolio. Quick recap of the stocks in his portfolio: Gujarat Pipavav Port, Tata Steel, Tech Mahindra, Kane, Cipla, Coal India, ITC, and M&M. Prakash, thank you so much for spending time with us and answering our questions this week. If you have a question for Prakash Devan, write to us. Email ID is at the bottom of your screen. You can also reach me personally on Twitter. Big week next week. We'll be here to help you through it once those results come out. Thanks for watching.